Okay, welcome to the next chapter in Unit 15, Trade Strategies using TPO and Volume Profile. So now we're going to talk about futures markets, specifically the regular trading hour gaps. Okay, so this is something that is pretty unique in the futures market as we talked about. And for this, let me go here into the S&P 500. Okay, when you have markets like the S&P 500 or the Nasdaq, Dow Jones, even the currency futures like the Euro futures, etc., as you know, the CME markets are open, most of them about 23 hours a day. We have the extended trading hours that opens from 6 p.m. Eastern to 9:30 a.m. Eastern the next day, and then regular market hours were open from 9:30 a.m. Eastern to 4 p.m., which is basically the stock market hours, and that's when we get the most volumes and institutional participants, etc. So here, this is the TradingView platform. You can do this in any platform you want. Down at the bottom here, you can see that it says electronic trading hours, and this is pretty much putting together the ETH and RTH sessions on the charts. But if you go into just regular trading hours, it is going to split this. And now what you're going to be looking at here is basically just from 9:30 a.m. into 4 p.m. So you're only going to be seeing regular market hours. What does that do? Well, now you're going to see that between each trading day, there's either two options of what's going to happen. You're either going to have days where the next RTH session is going to open within the close of the last one, or you're going to have days, for example, here, where there was a lot of movement in the extended hours, the Globex session, and we have a big gap left here. These levels are very important to track when it comes to where the gaps occurred. So like right over here, what I like to do is take this and just have these levels marked off, because in the future, these are going to be really important levels of targets, because during regular market hours, as we spoke about, that is when most of the institutional and big traders are going to be participating, moving the most amount of volume. So these gaps that are created in between sessions are going to be very significant areas right over here. Like you can see, for example, this one that we had just on the previous close before today. We had the candle close here, and then if we extend this, we had the gap up. So if we go into a lower time frame, you can see how here the market just pretty much pushed down into this low, this bottom area of this high volume node. We filled in the gap over here. This held as well as support, and then we had a nice move up from that level. Like for example, this level right here now, this is going to be a very important level that I'm going to be tracking now, because you can see any down move now, this is going to be one of the main areas that we're looking at in order to just fill in this extended hours gap that was left between the RTA regular trading hour opens. Okay, and if you just keep scrolling back, you can see most of the time you will get some kind of gap. There's times, for example, right over here, where The gaps are very minimal. So like in this cases, like you can see the gap was just this right here, but you can see how market still had a pullback, filled that in, held these lows, and then we continued upwards. Here's another one. Right here, we had a gap up on this move, and then market just had our pullback and then into this fill here. Okay, so this is not so much a strategy, because how you get in to get on this trades down here, well, that'll be using all the concepts we've been covering in this course. You can go by the market profile order date types. You can look market profile as well for any fills and things. And this is actually possible. If I go into Sierra chart and I go into the market profile here, if I right click, there's an option called exclude evening session profiles. If you do that, all you're left with is the regular trading hours, and same thing here. Now you're going to have the gaps from here. You can see you had your close here, open the next day. So now you have this gap in between the profiles, and same thing. This one, for example, we had a pretty almost negligent gap. This one, we had a little gap between here and here. And so you can also split the profiles. And you can see, for example, here, we had the market open this day, push down, very wide initial balance. And then eventually we did push up and closed the gap into the previous RTH session close right over here. Okay, so that is a way too. You can set up your market profiles to only show you the regular market hour sessions, and then you just go by the close and open markers to judge where the gaps are. For example, this one, we had a gap that was closed from this gap down that we had between these 2 days right into this gap of this open and close, etc. Okay, but might be easier to track it too, again, just on a regular candlestick chart. And you can just see how these are present all over your charts, and they will represent very good target areas for your trades. Like, for example, here, etc. Okay, so that's just another element that I pay attention in my trading that I wanted to reference. And again, you get that by just selecting regular trading hours in the futures market, specifically on the CME.